Hi, good morning. Miles Carter from Trolley here. Wanted to just take a moment. I'm here with Jessalyn. We're ready to start. I think we're going to wait about a minute or so to let some people filter in. I see the numbers are still filling in. We just went live. So at about 11:02, we'll go live and start into the presentation. But yeah, happy to see we're getting some folks in. Um, I know that people may have questions and comments for us. There is a comment and private chat feature for anyone who joined us um, via the link you received in your email on LinkedIn Live. You can interact through the LinkedIn Live. However, at the end, we're going to open it up to questions, and if you want to drop those in the comments or the private chat, that's where we'll receive them, and I'll pass them along to Jessalyn through there. So please just drop those questions in as they come up throughout the presentation. Maybe we'll answer them, and that will mean that we get to pass them. But otherwise, we'll grab them and we'll have time for Q&A at the end. So just going to wait another minute or so, and we're going to let some people filter in here. So Jessalyn, are you feeling good? Should we get started? Get rolling with this?
I say we get rolling.
Okay, perfect. So like I said, my name is Miles Carter. I'm the Senior Director of Content Marketing here at Trolley. And today we're jumping into this topic around digital reporting. There was a really good conversation we had here on our team about who should we be speaking to about this. We have a digital reporting product coming to market. We've been doing some DAC7 reporting for a year, but the OECD rules are rolling live in more and more places in 2024 and then 2025. So for us, it was important for us to have the conversation about who to speak to. And we asked that question, and we had a list of names: tax, compliance, product teams, lots of folks we thought we should be speaking to, but we said, who really owns this or who should own it? And what a great question. And with that question, we said, this is the perfect thing to be when we want to get out there and talk about this topic. Let's talk to someone who could give us some direction on this, or at least help us out. So Jessalyn has been an advisor with us here at Trolley. She is a CPA who's been working in the field of tax transparency, tax reporting for about 15 years. She has worked with Big Four, Big Four tax company agency. I'm missing the word here. She's our subject matter expert who helps us out on these topics, and these topics are really important for us to get right because we want to get it right for our customers. So they get it right for their customers at the end as well, and their recipients. So Jessalyn is someone that we've come to rely on, and I wanted to give her an introduction, let you know who she is, and then from here on, she is going to take over. She's going to walk through this topic and dig deep. So if you do have questions, if there are things you want to know, make sure to leave them in the comments and the chat. We'll try to get to them at the Q&A afterward. If not, you can send us an email and we'll put some stuff together after the fact. But with that, I want to let Jessalyn take over because she's really good and get into the meat on this topic. So I'm going to mute myself. I'm going to disappear. Jessalyn, the stage is yours.
Thanks, Miles. And putting together this discussion was relatively easy because, as Miles mentioned, this wasn't just a conversation that started with Trolley. It started between myself and Trolley as well. When we talk about the different products that Trolley has and the strategy and the future of those products, naturally the question comes up from me, Miles, tell me who you're talking to in these organizations, because I have my perspective on who I think you're talking to, but tell me who you're actually encountering. And we discovered that, as Miles mentioned, there's a wide variety of people that might be impacted in an organization by these rules. So really excited to kind of really replicate the conversations that Myles and I have been having over the last year, and hope that people derive some benefit from that. So Myles, I think you are in control of the slides. If you want to advance one quick agenda, I'm going to do an overview of what are digital platform reporting rules, give some terminology, and hope to give a picture of what this all is and why it's here. And then really the focus of the discussion is, where should this responsibility land in an organization? And today we're not going to directly answer that and say, you listeners should choose this department. This is a conversation to learn all of the different considerations that you might make in order to determine within your own organization and your own needs where digital reporting lands. And so we'll kind of present some arguments for different layouts and structures, maybe not arguments, but facts and situations to consider. And then we'll have time at the end for some Q&A. So Myles has advanced. Yeah, this is a little bit of summary of what I kind of covered there in the agenda. And we can move on to the next slide. So we're going to start with, what is digital reporting? What is digital platform reporting? And it originates from the OECD. This big, long block of text is the name, Model Rules for Reporting by Platform Operators with Respect to Sellers in the Sharing and Gig Economy. We sometimes shorten that to mean to be called the Model Rules. But if you don't have the context of the rest of that text block, you don't know what a model rule is. On the next slide, what does it mean to be a model rule? Let's step back and understand what these digital platform reporting rules are in the context of the OECD itself. The OECD does a lot of stuff, not just this, but within the department that we call, or they call, the Automatic Exchange of Information, AEOI, sometimes called AIA, AEI, depending on the language. The OECD sets what we call a standard. They develop a model whereby governments around the world can adopt the model that the OECD writes in order to improve transparency of tax obligations within the local jurisdiction, but also cross-border. That's what automatic exchange means. It's another word for cross-border sharing of tax data. This is the ability for Germany to know that someone that's a German resident is earning money outside of German borders, and that the governments outside of German borders will share that knowledge back to the German government. So the OECD creates this standard many years ago called the Common Reporting Standard. That's on the left, abbreviated to the CRS. And this was a standard that was created in order to share financial data about financial assets like bank accounts and investment accounts. When the OECD creates a standard, though, it's not a law. And so countries around the world have to agree to implement the standard. And when they do implement it, they should stick to the standard as much as possible, but they have their own leeway, in a way, to adopt it to their own local needs. And so when the CRS, which is the OECD template standard, is adopted locally, it's called within the EU DAC2, and all 27 EU member states were obligated and continue to be obligated to follow this standard. And outside of the EU, it's referred to as the CRS, and those countries will follow the OECD model. And there's over 140 countries outside of the EU that have adopted the Common Reporting Standard. So through the OECD's work, the successful work with the CRS, they've developed more standards, because the CRS only addressed traditional financial assets like bank accounts and investment accounts. So some years later, the OECD published the Model Rules for Reporting by Platform Operators. Abbreviation is the MRDP. And this is for income type payments, not financial payments. It's gig work. It's when somebody earns some money on a platform or rents some real estate on a platform. and makes some profit, typically. When the EU decides to take the OECD model and disseminate it to the member states and push it out into law, it became DAC7. Now, you'll notice we skipped 2 and went to 7. There's some other DACs in between. They're not the topic of today. And so when we talk about DAC7, we are actually talking also about the OECD Model Rules, the MRDP. We sometimes use them interchangeably, but I hope this diagram shows that the OECD set the standard template. The EU adoption of that is referred to as DAC7, and then non-EU countries that adopt the model rules will refer to it in their own language, but we call that the OECD MRDP local adoption. Now notice that the CRS was adopted by EU member states plus 140 other countries. So far, outside of the EU, the model rules have been adopted by New Zealand, Canada, United Kingdom, and there are more coming soon. Costa Rica is another example. But many countries take many years to bring these online. And so every year we're going to see more countries adopt this. Not the topic of today, but just so you understand in the broader OECD context, we also have DAC8 out there, which is the crypto asset reporting framework that the OECD adopted, CARF, and it addresses specifically crypto assets that are not covered under the CRS, which was for traditional financial assets. 20 countries have said they will participate in the CARF, but it's further behind in the schedule than the DAC7 and the MRDP. On the right side, I've also shown other domestic tax reporting regimes that fall into this same concept. Australia's SERR reporting for income payments, US 1099 reporting for income payments like 1099K, Canada's T4A reporting for income payments. These are all mechanisms that governments can use to make sure that people that are earning money or holding assets outside of their borders report and pay tax on that income. If we could back up, there's one other comment on that slide that I want to make. Two comments. Everything you see on this slide is a reporting requirement, but it is not a tax requirement. Let me explain what that means. Tax law is the law that says an item of income is taxable and a taxpayer pays tax on that income. We call that tax law. What you see on this slide is not tax law. None of these rules, requirements, or standards determine whether or not an asset or income is taxable. All that tax reporting and tax transparency does is report the payments without any knowledge if they're taxable or not. And then it's up to the local tax authority and the taxpayer's personal situation to determine if the income is actually taxable or not. What are the tax consequences of earning that income, holding that asset? So when the model rules came out and the DAC7 came out, many people thought this was a new tax on gig work. It is not. It is just a reporting mechanism, and whether or not gig income is taxable is dealt with elsewhere in domestic laws. The other thing that I mentioned on this slide is that I put in the parentheses that this is about income payments, gig work, we can say. But the DAC7 and the MRDP, the model rules, also want to detect VAT or other indirect tax evasion or missing VAT. Sometimes people are not evading tax intentionally. They simply didn't know about their obligations. So the MRDP is both about detecting missing income tax that governments might be missing from gig work, cross-border gig work, but also where gig workers are failing to collect, withhold, and pay in VAT and other indirect taxes. So it addresses both principles. And Myles, I think you had was there a question that you popped over to me? You are on mute, Myles.
Always technical difficulties. just wanted to let people know that if they have any questions, please drop them in the comments. We're going to hand them over to you. Wanted to make sure people on LinkedIn Live saw that as well.
Perfect. Glad you mentioned it because I saw it pop up and then it quickly disappeared. So thank you. And Myles is going to jump back into the conversation once we kind of get over the nuts and bolts, like what is digital platform reporting? We kind of have to get past this first part so that we're all on the same playing field. We know what the digital platform reporting rules are. So on this slide, I dive in a little bit more on the digital platform reporting rules. So we set aside the other OECD activities, we set aside the Australian SERR and 1099 reporting to just look at the OECD model rules and DAC7. Because I mentioned EU member states have adopted the model rules through the DAC7, which is a directive, number 7. And then each 27 member states implement into their local law using the template. And the non-EU countries just follow the OECD template. But what this means is that you can have differences. Even though it's a standard and a template, it does result in differences in how the rules are implemented in various countries. There's a number of variances that can occur, but we wanted to highlight the 3 key areas. I've used a few countries here as example. Netherlands and Ireland are my first 2. They are EU member states. United Kingdom and New Zealand have adopted the OECD model rules. They are not EU member states. The 3 areas that we find differences between the DAC7 and the OECD model rules are first in how the country determines that a platform is in scope of its country's rules. That's the first column. The second one that we see a difference is how is residency of the seller determined? And the third one is what kind of activities of the seller are in scope of reporting. Now, before I go through the 3 columns, on the left side, we have, again, these are examples. In the Netherlands, they had to adopt the DAC7 and the OECD model rules, but they put them together in one law, the STB 2022-541. But it's important to mention, as example, well, it's a better example with Ireland. Ireland actually implemented these 2 things under 2 separate laws. So it's the same law, but it's 2 different sections. DAC7 is written, and then the OECD model rules is written. They're in 2 separate sections. Why does this matter? Because under DAC7, Ireland will exchange information about other residents of other EU member states, but only with other EU member states. Ireland had to separately adopt the model rules in a separate section of the law in order to exchange information with non-EU member states. So because it's written in 2 different parts of the law, actually implementing this stuff, if you're a multi-jurisdiction platform, becomes very challenging because the rules are different. And you have to consider both sets within a single jurisdiction. Now, because the United Kingdom and New Zealand are not in the EU, they only have really one law set. It's the OECD standard as they've decided to implement it. Okay, so we have an example of this on another slide. I'm just at a high level going to show that in the DAC7, to be an in-scope platform, the platform needs to be based in the EU. And what does it mean to be based? We have another slide for that. Or the platform has sellers that are resident in an EU member state, or the platform has on its platform real estate that's available for rent in the borders of an EU member state. When other countries like UK, New Zealand adopted the OECD model rules, they make the determination based on, is the platform based in their country or some other criteria that they may have implemented on a country by country basis. The second column here, the DAC7 determines the residency of a seller on 4 criteria: primary address, government verification systems, the country of their tax ID number, and there could be multiples of those, and this concept called a permanent establishment. And this is an and test. If more than one country is detected in these 4 criteria, all of them are a reportable residence of the seller. Whereas under the OECD model rules, permanent residence is not a criteria. Sorry, permanent establishment is not a criteria. And the tin country is only sometimes a criteria. New Zealand, yes. UK, no. Again, makes it challenging to implement multi-jurisdiction. And then the third difference that we see between the two is within the DAC7, there's 4 kinds of activities that are in scope: services, goods, real estate, rentals, and transportation rental. Whereas under the OECD model rules, typically services and rental real estate are in scope, but goods and transportation may or may not be. For example, in United Kingdom, goods are in scope. In New Zealand, they are not. We can move on to the next slide. So we're going to do a really quick moment with this, and then Myles is going to talk about this a little bit later. We developed this questionnaire about what does it mean for a platform to be based in a country. Now, Trolley and I are not your tax advisors. We do not give tax advice. We actually use this questionnaire to help potential Trolley customers communicate to us why they're in scope of reporting in different jurisdictions. Because how the reporting works changes based on how these questions are answered. And so when we are generating like workflows and XML files, we need to know the answers to these questions. So we thought we'd share here in the conversation. To be based in a country is these first 2 columns. So by way of example, we ask the question, first column, first bullet, has residence for tax purposes in this region? And then we ask you, of the 5 boxes below, EU member state, United Kingdom, New Zealand, Australia, Canada, are you resident for tax purposes in any of those places? Check all that apply. Then we go on to the next one. Are you incorporated into the laws of any of these? Check all that apply. Do you have a place of management and control in any of these? Check all that apply. Then we move on to the next column. Do you have a permanent establishment in one of these regions? But notice it's only 3 of them. It's not all 5 of them, because that's not a criteria in every region. Third one, has sellers located in this region? Notice this is any EU member state, also Canada, also Australia. Not the same countries that were in the other columns, because again, each country has adopted this slightly differently. So this helps us, you see in the bottom row here, where a checkbox is present in part 1 and part 2 in the same column, then we have a platform with an potentially in-scope reporting region. And then if they're really, not sure, they can go talk to their tax advisor, but at a minimum, it really helps the conversation for us in determining that we've got the right software solution to serve the setup of the platform. So again, we can dive back into this later. It's not really the primary focus of this webinar, but wanted to touch on it to explain what does it mean to be based in a region, because I put that in quotes on the last slide. Myles.
Yeah, and Jessalyn, thanks for mentioning that. I want to speak to this. We think this is a very powerful tool for people to use to give them some sort of idea of where to start the conversation with their tax advisor or their tax firm. And what we'd like to do is within the next 2 weeks, provide this as a tool that you can walk through a bit of a wizard, answer a couple questions with some radial boxes, nothing that's going to take you any more than 3 or 4 minutes if you've thought of it ahead of time. And at the end, we'll give you a bit of a report of where we think you should open up the conversations, where you should start those conversations. And I think that could be, we believe that it would be very powerful to get your team moving in the right direction, understanding which of these laws you need to comply with, where you need to put some process in. And I think the rest of the conversation that we're going to have today actually gets into who in your team should be thinking about this and really focused on it. And I just want to jump into that. So thanks for setting that up, Jessalyn.
Right.
Whoever's here and whoever's registered will get a link as soon as that's available. And we're going to move forward with that. Like I said, probably within the, we're talking within the next 10 days, you should see something land.
Awesome. We will move on to the next slide. Now we're going to get into the topic of the purpose of this whole webinar. When a platform is in scope of these requirements, where should it land in the organization? Who should be responsible for it? And there's a very specific reason why this is not such a clear answer. So I've made up a very vague organizational chart here. Everyone's going to look different, but most organizations have these departments that we show in white: tax, finance operations, legal compliance, general business operations, customer service, product and engineering. Every business has a customer that uses a product. So we've got a little picture here, imagining the product is a nice fishing pole. And we also know that the experience of a fishing pole is not just buying it off of the shelf. It's, what's the weather like when I go use the fishing pole? What's the quality of the water? How much fish are available? What friend do I have with me? What tasty beverage do I have with me? And the interesting thing about digital platform reporting is that it's a direct interaction with the customers of the business. So let's think about stakeholder groups here. These are these green boxes that any organization will have. We've broken them into 5 categories. There can be more, but for this conversation, we're looking at 5. These kinds of organizations will have investors that are a stakeholder that they need to report and be responsible to, regulators, governments, tax authorities, vendors and contractors, employees, staff, and customers or recipients, or we would say buyers and sellers when we think of a platform. So a platform being a place where the buyers and sellers of things come together and find each other. Both of those might be, for this conversation, we will refer to them as customers because they're the people using the product. So the difficult part about everything I showed you on the last slide is the word tax keeps coming up. So everyone thinks, not everyone, many people think, digital platform reporting, model rules, DAC7, that's a tax thing that fits in tax legal compliance. And the first gut reaction is it goes there. But what is unique about digital platform reporting is that while it is a set of rules that have a direct relationship with regulators, there's a filing component to the regulators. There is also a direct experience with the customers of the business. This is what makes it challenging to decide where this thing lands. I'll show this I'm going to jump ahead in my brain for a moment to another slide. But if we think about just the traditional tax function, traditionally tax is more of an internally facing function. Tax people within an organization are not usually directly impacting or interacting the customers of the business. Tax rarely has a direct effect on that user who's holding that fishing pole and enjoying the weather and going fishing. Very, very little impact, unless we get to digital platform reporting. Now, all of a sudden, we have a function that can have a direct impact on the person using the product that's being sold. So do we have a good example of that? Yes. Let's move to the next slide, Myles. Here's 3 examples where tax has a direct interaction with users of a product. I've taken these screenshots from Upwork and Airbnb, just went out to some public websites and took some screenshots. If you are a gig worker using Upwork to make some money, When you set up an account, you have to go to this tax information page and provide your tax residence and fill out a tax form and give your VAT number. If you're on Airbnb and you want to rent out your apartment, there's a whole tax section. You have to fill out a form and add all this sensitive tax information. So product managers and customer service agents care about this stuff because it's people's direct experience of using Upwork and using Airbnb. So there's the key moment that this becomes difficult to decide, where does digital platform reporting land? Let's move on to the next slide and talk about some risks that happen when digital platform reporting ends up in either the wrong department or the wrong setup. And then we'll get into a little bit more of, tax and compliance in each one. So what's the risk when things go wrong? If you are a platform who needs to comply with digital platform reporting, DAC7 OECD Model Rules, and you just dump it in one place because it seems easiest, without thinking through the content of what we're talking about here today. These are some possible outcomes. Unclear strategy and value roadmap for the product, manual processes, incomplete, stale data, underreporting, overreporting. Underreporting is a regulatory and financial risk. Overreporting is a customer service risk, because the customers of your product are not going to appreciate their personal sensitive tax data being shared when it's not required to be. If we move on to the next slide, here's a couple of examples of some headlines. The three key areas of risks are customer acquisition and retention risks, financial and penalty risks, and reputational risks. When companies get tax reporting wrong or something goes haywire, they can end up in the news just like these companies did. They can end up on the front page of Reddit where they don't want to be over tax. There is a direct relationship with the experience of the customer that has to be considered in determining who are the right people to make sure that this process is operating smoothly to reduce these three kinds of risks in our company. Okay, let's move on to the next slide. Let's talk through a few of these departments. So I mentioned earlier that the word tax comes up so much that people naturally say, maybe the tax department should take care of this function, take care of doing digital platform reporting. So some natural pros in this bucket. Tax departments have expertise in tax reporting and familiarity with local and international tax regulations, cross-border tax issues. They have existing relationships with tax authorities. And this is a really big one. The head of tax is the party that's responsible to answer when fines or penalties arrive or audits and questionnaires arrive. I was just on a call today with a company. Tax authority in an EU member state had approached this platform and said, you haven't filed a DAC7 report. We want you to give us an analysis as to why you are not required to report, and it's due in 2 weeks. And it's going to be tax, legal, or compliance that are getting those notices, getting those questionnaires, getting those audits from tax authorities. And so ultimately, they have skin in the game. If we move to the next slide, the compliance department is kind of like tax. They both are units in an organization that typically are focused on the external regulator as a stakeholder. Also, investors, I call this one of their key stakeholders because tax department, for example, has a focus on reducing tax burden, which increases profits. And that's something that investors care about. Okay, so the compliance department has some pros for this landing in that part of the organization. They have oversight of broad regulatory compliance frameworks, not just tax. They also have experience managing similar cross-border international directives and responding to diverse types of regulators. They also have experience, and this is a key factor, with broader sets of data, including sensitive personal information of the customers, not just tax-related data. The tax department is typically focused on internally facing data. How much money did we make this year? How much money did we spend this year? Without touching any personal information of customers, buyers and sellers using the platform. Compliance has much more experience with interacting with that kind of data. If we move on to the next slide, neither of those is perfect, because if you noticed, they both have a sort of primary objective, a primary stakeholder of investors increasing profit, reducing expenses, or external regulators. And as we saw on an earlier slide, if their sort of core principles as a department are not on the experience of the customer using the product, then you run into potential reputational risks, customer acquisition and retention risks. And again, customer, we are referring to buyers and sellers, recipients, people using your product. So what we want to show with this slide is my suggestion is we step back and start to look at other possibilities where we think about ownership versus oversight. Ownership means a business unit that does the work, does the hard labor, gets at the tools, gets the filings done in a customer-friendly way, by the deadlines, but a different department has oversight of that function to make sure that it meets minimum standards, that it meets regulatory requirements. So we've highlighted in this example that there might be a setup where product and engineering or general business operations and analysts or finance operations are really digging in with their hands to do the work, and tax, legal, or compliance has this oversight function. Myles, welcome to the stage.
Yeah, I'm looking at this and I'm hearing it and thinking of like, this is the perfect time to be talking about like cross team collaboration, making sure that, tax compliance and legal are having those good conversations because they own the oversight. And maybe the head of tax will be the person who has their feet held to the fire. But legal is going to get the letter and compliance is going to really worry about it. How do you think about like the collaboration within, let's call it between an ownership group and an oversight group that might not be the perfect silos of the departments that they generally work with?
One of the things that I've seen through the conversations that you and I have had and in other contexts is a lot of times yourself, your team, or myself, we're talking to tax teams to make sure that a software product like Trolley or any other product meets a minimum regulatory standard. But then they're collaborating with product and engineering who make a final decision on build versus buy, and if it's a buy option, which software are we buying to comply with these rules? Because ultimately, product and engineering wants to make sure that tax, legal, or compliance signed off on the minimum legal standard, but that they're in the driver's seat of, will this experience not just maintain my relationships with my customers, my buyers and sellers, but could it even improve our relationship? Can we actually add value to the experience? Is there a brand strategy to making our relationships with those customers even better? So that's where I see a lot of the conversations starting and stopping. Is that also your experience?
Yeah, it's something that we're talking about all the time, that if you can offer, we as Trolley or anyone who's working with end recipients, a product that comes in and makes the internal process, but also the external facing experience better, win-win-win. It's win for the multiple teams on the inside and also for the end recipient, the end person being paid. So I think that there is, really good argument for keeping that, you know, we use the word versus a lot in this in the title and in some of these slides, but ownership plus oversight is maybe where we're seeing a best
That's
of
even
all
better.
worlds.
Plus.
Yeah,
Yeah.
yeah,
I love it.
yeah. Well, thank you,
And
thank you. I'll let
if
you.
we
I'll
go to
let you
the
get back. Yeah.
No, perfect. Let's go to the next slide because I know you're going to chime in on this one as well. Just called this other possible setups. There's another option that we call external managed services, where sometimes an organization says, this is so much work that it's actually distracting our tax, legal, and compliance teams from really more core business functions that are more critical to us, or our product and engineering customer service teams. And we'd like to just give it to someone else to do it. And sometimes big four organizations support managed services. Like that's a thing that they offer. But here's the problem. You can never fully outsource a function. I mentioned earlier the tax head. If a notice comes, if a questionnaire or an audit comes, it's coming to the head of tax, regardless if the sort of process itself has been outsourced to an externally managed service. Ultimate responsibility will still arrive on the desk of that head of tax or head of legal and head of compliance, depending on the organization.
The
So
buck
this
always
is some
stops somewhere internally, right?
That's right.
That's yeah.
There's still always that oversight function will still always be present. It can never be 100% outsourced in that way. And the other thing that I see is a lot of times people don't want to be outsourcing customer service, because customer service and customer touch points are like a core bedrock of acquiring and retaining customers for many different kinds of platforms. And there is a customer service element to digital platform reporting, because the onboarding experience of collecting the data and the later reporting of that data generates questions from people and concerns. What's happening to my data? Why are you asking me these questions? What are you doing with this information? How do I edit and change the information? Which leads into the next point, which is the role of external software support. There are some platforms I've spoken to that have really, really minimal exposure to these rules, and they can do it by hand, but that's actually really, really rare, because the quantity of people you're dealing with, people being customers and recipients, buyers and sellers, is so large that you typically need an automated software to document who you're doing business with, collect the data, and then analyze who's reportable to which jurisdiction and why are they reportable. We kind of got a flavor of that earlier on the comparison slides. So the role of external software we've kind of highlighted here, Trolley as an example. Obviously, it's our best example because I'm talking to Trolley here today.
Yeah, we had to sneak it in.
Of course. But it's a great example to show that software can have a role in the interactions, the customer-facing component, but also the regulatory-facing component, the actual sort of the filing piece to the tax authorities. Sometimes those are separated, sometimes they're combined into the same software, so you can have lots of different setups. And I know Trolley supports a number of different setups for that.
Yeah, and I just want to speak. There's a piece to that if someone's coming on, sitting here and seeing Trolley for the first time, and we're saying Trolley it's where you're having conversations and how you can make life easy when you're dealing with regulator stakeholders, vendors, contractors, customers, recipients. Yes, that's true. But just because I put the logo there doesn't mean that we jump in and take ownership of what's happening there. Actually, one of the strong suits of what we try to offer is we offer a lot of the functionality and improve those relationships in a white label package. So when you're having those conversations with your end vendors, your end customers and recipients, you'll never know it's Trolley. They will never know it's Trolley. They will just know that they have been paid all year, and now they're getting sort of an end of year summary of all of the income earned from a platform. Trolley's handling that in the back end. Your name is on it as a platform, but the experience is the Trolley, high level, great user experience that we're trying to deliver on. Just this is probably the biggest place anyone would ever see our logo versus in the product. It's not it's your logo that's on there. So just want to make sure I hit that point, because we want the experience to be great, but it's your experience as a platform.
Before we move on to the next slide, there's one stakeholder we haven't talked about that I'm going to talk about on the next slide. So I just wanted to mention it here. Put a little highlight on that employees stakeholder. We've really focused on regulators and investors, like the profit, improving profit from a tax and finance perspective. The customer is obviously a huge stakeholder. So let's move to the next slide and throw up a couple other considerations. The item on the right, we already called out. There's actually a product and brand strategy that platforms can consider with digital platform reporting. I've made up this quote here, but I have seen this before on Reddit. I do spend time on Reddit as a CPA. I'm freelancing on X platform, or a house hacked on Z platform, and they gave me tools to help me better file my taxes, to better understand my gig work tax obligations. Why am I not getting this feature on this other platform? Or when is this platform going to have that feature? Many times, tax transparency and tax reporting topics are spoken about purely as regulatory requirements, or purely as tools designed to detect tax frauds and tax evaders. But we have to go beyond that and think about these requirements as also an opportunity to help the people that are trying to do the right thing, the gig workers, the freelancers that are trying to pay their taxes and just need better tools to be able to do it. So there's product feature opportunities that I don't want people to miss. Now, I said I was going to talk about employees. So that's my first bullet on the left side. One of the considerations I point out when people jump to the tax department, they say, oh, this is a tax function, digital platform reporting. Our tax department's going to take care of this. Because this is a customer-focused situation, as we've covered on the previous slides, sometimes the employees within tax departments don't have the skill sets and the knowledge and the experience and the bandwidth to actually understand customer interactions. And so you run the risk that they are creating high friction processes that comply with the law. They've hit the bullets, but leave customers frustrated, angry, going to Reddit, complaining, and things end up on the front page of the news. So this impacts talent recruitment and retention as well. If you right now went to LinkedIn and made a job posting called DAC7 specialist or DAC7 manager and described what was the responsibility of the job, you're not going to find a perfect candidate, because the skill sets that are needed really bridge multiple things. Technical expertise, what does the law say? That's a bit of a tax and legal background. Experience interacting with customers and creating low friction customer experiences, and knowledge of product and engineering. That is a huge ask, and you will find very few candidates that have the skills and capabilities to meet all those requirements. It's just not a typical career trajectory for people in like tax, legal, and compliance functions. The second bullet we kind of covered already: compatibility of process and data needs with department core functions. I have seen in many cases where an organization is trying to find the right place for this to land, and it's hot potato. The business operations or product and engineering say, this is a tax job. this doesn't add any value to my customers, so I don't want to build anything. And the tax department says, this has nothing to do with the corporate taxes and the profit of our company. This is not our problem. This is someone else's problem. And there's never a beautiful, elegant place for it to land. Hence, we looked at oversight versus, kind of the doers with their hands on, being responsible for the process versus having oversight. Ownership versus oversight were the words we used. And the third consideration I've called out here is the scalability as organizations grow or expand their operations. This kind of goes back to some of the manual processes we mentioned. Maybe there's a manageable process now and the tax department can deal with it, but then the company pivots and wants to scale their product and grow, and they're having a huge increase and shoot up in the number of buyers and sellers using the platform, and all of a sudden something that could be done manually no longer can be done manually. And so considering the right department for growth and scalability is important, because some departments are just, it's really not in their core energy and their core design of how they operate to be scalable and growth driven. With that, let's move on to our Q&A.
And first, thank you, Jessalyn. I think there's a ton of information in the last 50 minutes, digging into different teams, different groups. We want to make sure that we're really sort of like opening a conversation with this session, and I think that's what we did and what you did, and thank you for that. I know that there are some people who are live in the session. There's some people who are live on LinkedIn Live. If you have any questions, you can drop them in the chat. The chat is open in both the StreamYard session and in LinkedIn Live. I'm going to wait a minute or two, see if some questions come in. Jessalyn, I think that, after someone watches today's session, what do you think, the first action, if you were asking someone to take a next action, what would someone be leaving today's session? What would be the first thing they're going to do?
Draw your org chart, and you might already have one. Identify your stakeholders. So we gave a really broad example that's likely to resonate for lots of organizations, but each company is going to be different. So really identify stakeholders and skill sets in different departments and career trajectories, that employee sentiment. Is this really what people want to be working on? That is the first thing that I would want people to walk away and do.
Okay. Get that org chart, understand how it fits.
Stakeholders.
Yeah, understand those stakeholders. I have a question that came in from Claire. I'm gonna show it for everyone so everyone can see it. But how can a company learn about new compliance requirements going live? For example, Costa Rica. I think we had this nice tracker, and I'm going to answer just saying, while DAC7 was going live, we took a little bit. We kept updating this page where which countries have actually ratified DAC7 into law, and we were following that because it's been ratified across Europe. That's sort of like a final version of that. But if someone today wants to know about the Costa Ricas of the world, even what's happening in Canada, what's happening in the UK, Australia, anywhere where this is going live, where are they going to find that information?
A few places. I'll give my own personal pitch. You can follow me on LinkedIn. That's not a great option though, because you might miss content. The second place is really the more key area. The OECD typically has a page dedicated called Automatic Exchange of Information. And they have some nice tables and PDFs and trackers that show what countries have adopted different requirements that we covered earlier on the slides. It's not totally complete. So if you're trying to dive in and find really nuanced pieces, you may not find it there, but that's a good place to know what countries are in and out, which ones have committed versus which ones have actually published their law, because committing is different than pen to paper publishing and putting a date on it. And the third response to that is, even though Trolley is not a tax advisor, and I'm not anyone's tax advisor here that's listening in, software platforms like Trolley are keeping track of all the different countries that are coming online and assessing, you know, looking at the growth and scalability to add in countries as they come online and are requested by, various customers of Trolley. So one of the things that Trolley is aiming to do is, and does with other Trolley products, is make it so that you don't need to think about the tracking of those things, because if you are using a software like Trolley or some other software, it's already thought of that and has already adapted to it.
Yeah, thanks for that, Jessalyn. 100% agree. Our product team works with you, works with other experts to understand that. So Trolley users, as we have updates, we implement them. Every year we have tax updates in our existing jurisdictions, but we may be adding more tax and reporting jurisdictions at any given time. And we keep that up to date, and that's part of that. Claire and anyone else who's on here, you will get a follow-up email, and we've talked about some topics where we didn't show a link on the page or on the slide. You'll get an email that shares the recording. I'm going to try to make sure any of those extra resources, any of those, let's call it referral reference material that we alluded to, we'll send that out. You should get that in a follow-up email. So that's there. And keep your eye on the Trolley blog, trolley.com/blog. We're talking digital reporting over the next couple of months, so you should see some content either added or updated, which will have more of this information on there. Well, Jessalyn, we have 3 minutes left. If we had a last minute question, I would throw it out there. But what I'm going to do while I wait for anyone to maybe drop anything extra in is I'll jump in. We're here today. We really wanted to talk about this whole idea of digital reporting, OECD, DAC7, what's happening in Australia, what's happening in New Zealand. All of these laws are coming up. We want to be having the conversation because I think people need to know what, who, what, where, how. All of those conversations should happen. We really tried to avoid a heavy pitch on Trolley, but we're here as a Trolley webinar. We have a tax product, trolley.com/tax. You'll find information about our tax and reporting product. Within that page and within that section of our site, you will find all the information you will need to about digital reporting, about DAC7, how our product works with that, and how you can move forward. We will also be having a session in the future that will be dedicated to demoing that. Stay tuned, and anyone who is registered will receive information when that goes live. I want to thank everyone for attending. Check your inbox in the next 24 hours for the recording. We're going to do an executive summary, trying to keep it under 2 pages. That's going to be my challenge, to keep it under 2 pages. And we will share the slides. So you'll get everything from here, plus a little value add executive summary. And then as we have any other related content and that or related items, including that tool to determine if you're in scope, we will share that with you. And we will get in contact with you via your email you registered with. So on that, I don't see any additional questions that have popped up. So I will say thank you, Jessalyn. I really appreciated you taking
Thank
the
you.
charge on this. I thought it was a fantastic session. Everyone who attended, thanks for joining. And we will see you the next time we host one of these. Have a great day.